Good evening and welcome to Heritage Capital Wealth Talks. Tonight, we touch a subject that is only at its very beginning in Romania, the family office. In Western Europe and the US, families have been using family offices for decades to manage wealth, succession, and legacy. In Romania, most wealth is still first generation, held directly by entrepreneurs. But as these families grow, a question arises. Should they keep managing everything themselves or build structures, family offices, or even multi-family offices to protect and grow their capital? To guide us, we are joined by Wimmer, a man whose career embodies both strategy and vision. Founder of Wimmer Family Office in London, an early pioneer in ETFs, who helped change how the world invests, and an adventurer preparing to travel into space as part of Virgin Galactic's first group of private astronauts. Per is not only a financial strategist, he is also a visionary who pushed boundaries in finance and beyond. For Romania, his perspective is unique. How to move from a family office, from family business to a family office, and maybe from a family office to a multi-family office in a market that is still first generation and just discovering this structure. Here in Romania, join me, Adrian, the president of CFA Society in Romania, and we're gonna talk to Per and get his advices and his vision about families, family offices, this space. First, thank you, Per, for joining. Thank you, Adrian, for joining, and let's start with some questions. Adrian, please.
Thank you, Charles. My first question is, as you mentioned, Romania is at the beginning in this industry. So my question is, if you can explain, especially for the Romanians listening and watching us, what exactly is a family office and why a family office is different from, for example, managing the assets via a private banking service.
Yes, it's a great pleasure to be here this evening. A family office is essentially sort of a vehicle, could be a holding company, etc., for managing two things. Number one, the investments of a family, and number two, the other related issues that a family may have. And these are issues such as governance amongst family members, if there's a wealth creation event, who gets what, who gets to say what, who decides, who runs it, etc. So governance. It could also relate to next generation, inheritance, how to manage that, so who gets what and how and when and all these things. But it could also be managing the current family office outside financial investments, such as managing the yacht, the properties, the assets around the place, car collection, if one has such one, etc. So there's many sort of things that are, to a degree, concierge service related and trust related, lawyer related. And then there's a whole category in its own right that are investment related. And investments could then relate to investments in stocks, bonds, in real estate, in
basically
in hard assets.
It's a holistic approach. It's basically of everything related to the family, from the portfolio to their passion, their real asset, everything related to a family.
Exactly. And I would also say this, not one family office is equal to the next one.
Absolutely.
When you met one family office, you met one family office. There's always tweaks and differences between each one, both in terms of investment focus and in terms of scope of activities, because ultimately they do reflect what the ultimate beneficial owner wants to and desires to. So, but there are some commonalities, of course.
But Per, if I want to go in something, especially in Romania, you have the first generation businessman and entrepreneur and the high net worth individual. So what are the risks of these entrepreneurs if they don't move to a structured family office model or a multi-family office model, which we know exactly that without these there is too much risks. So can you just give us some of the risks that you think that might face a family without the like structure?
Yeah. I guess the biggest risk statistically is that on average, the wealth that an entrepreneur creates, statistically, 90% of the times is lost by the third generation. That's a fact. So that's a lot. So sadly, a lot of wealth is created, and sadly, it's all lost again. Second generation could be because they're spoiled, they take things for granted, they don't work as hard, or they just want to do other things, or they do silly investments. Who knows? There's all sorts of reasons for it, which is not good if you're the wealth creator and the patriarch or matriarch of the whole thing. But there are things you can do to mitigate the risk that everything will be lost on average, like in 90% of the cases. And even if you don't lose it, even if you're good managing it, just the pure mathematic of family populations. You got initially one couple, and that becomes maybe 2 or 3 kids, and then they have 2 or 3 kids. Just the mathematics of that family tree means that the slice of the wealth gets less and less and less as we go down in the generations. And therefore, you kind of need to catch up on the wealth generation, not just the wealth preservation, but actually generating returns. That's important. And there are various things that a family office can do to provide to produce returns and to protect that things are not lost early on through silly things or taking risks that are completely outrageous, frankly.
I was talking with Adrian about the single family office and the multi-family office. And Adrian, he has something to ask about the multi-family office because it's something that it's something different for people to understand. Is it we do a single or a multi-family office?
You mentioned those two terms, family office and multi-family office. In a market like Romania, which it is new, it has the beginning. It is better for a family to start a family office or to join other family in a multi-family office.
Yeah, it's a good question, and there's a big distinction between a single family office and a multi-family office. I think that when one sits in front of making a decision, what route to go down, one key factor would be the level of wealth. As a rule of thumb, people usually say if you have 100, 200 million of wealth, then you can normally set up your own single family office, pay for the infrastructure, hire the necessary people as CIO and some other staff, and it kind of makes sense because you can afford that infrastructure, that it costs to run. However, if you are a slightly smaller family office with $10 million, $50 million, or whatever the number might be, it might actually make sense to team up and go underneath the umbrella of a multifamily office, whereby the cost of the infrastructure is effectively shared amongst 1, 2, 3, 4, 5, or even in some cases 20 or 50 families together. Therefore, such a professional provider of a multifamily office umbrella can provide a service that is professional, that has synergies between the various families that they serve, and whatever fee they charge ends up being value accretive because one doesn't need to reinvent the wheel at each occasion and set up expensive infrastructure to run this thing. So in essence, it really depends on the size of the wealth. But I would say above 100, 200 million, it probably makes sense to set up a single family office. Below that, go to a multi-family office, team up with the one you like. And then there can be some synergies, certainly cost synergies between the families.
Some co-investment that can be done. Per, I have something related to the when we met together, me and you 15 years ago. I think we were looking at the ETF because basically you were one of the innovators of exchange traded funds in ETFs. So and here in Romania, a lot of people they invest in ETFs, especially local ETFs or foreign ETFs. So how and why did you create an ETF fund? Is it separate from the family business, or is it like it's part of the Wimmer family office that you guys have? And how do you, for example, how do ETFs remain a tool for long term and the diversification for family offices, especially for when families has their own structure and their own CIOs and all of this. So let's start by why you created an ETF as Wimmer family.
Yes, we saw that it's a good idea to diversify. That's one free lunch you get in the world of finance. You can diversify and therefore manage the risk that way, but purely through diversification. So instead of having 1 or 5 or 10 stocks, you can buy an ETF. That could be an ETF on the S&P 500, the US index, and then you get 500 stocks in one go. So it has an immediate diversifier element of it, which is great. We in Wimmer Family Office, we have actually gone a few steps further because we were early movers in this space. And we have actually built up a proprietary model that tells us when some of these ETFs are going up and when they're going down. We're not always 100% right, but more often than not, it does tell us the direction of travel when when certain ETFs are going up and when they're going down. And this could be an emerging market ETF, it could be an S&P 500 ETF, it could be, liquid ETFs effectively. We spot the trends in these and we trade accordingly. Not every day, but typically every month or every quarter. And on average, we generate high single to lower double digits returns within that kind of proprietary strategy that we do, and that works well for us. It's a liquid, relatively low risk, but quite reasonably high return strategy, and we like that. We call it the wealth protection strategy. So that's what we do. We were early movers in it, and I would suggest if a family office or indeed a private high net worth did nothing else in the world and really wanted just to leave investments in a very simplistic form, buy an S&P 500 ETF and close the eyes and come back in 10 years' time, and you would have done very well. You would have done very well. There are better ways, of course, and more sophisticated ways that a professional manager, either like ourselves or indeed any multifamily offices, they can do to extract further alpha out of the system, further performance. But in a simplistic form, an ETF is a wonderful instrument. It's cheap and cheerful, doesn't have a lot of cost attached to it, and it does what it says on the tin. And we use ETFs for our asset allocation. So when our model tells us go a little bit bigger in emerging markets, we just buy more EM ETFs, or go more bigger in the US, we buy more S&P 500 ETFs. I mean, it's as simple as that. But our model is very good in the asset allocation and tells us what to buy.
And regarding the asset allocation, we have these traditional assets like stock and bonds and ETFs, but we also have the alternatives where the expertise is much more expensive than for a traditional asset like private equity or a venture capital or real estate. How do family office balance between these kind of asset classes, traditional versus alternatives?
Well, you're very right that in the alternative space, venture capital, private equity, there are sometimes superior returns to be had against the cost of liquidity. So when we trade our ETFs, we can get some decent returns, and it's liquid, so we can check out tomorrow if we need to, no problems. But if you go into illiquid assets, you can sometimes capture an illiquidity premium, which is obviously beneficial. Now, you shouldn't put all your eggs in that basket, because suddenly you might need liquidity. So there's a little bit of balancing act here. How much should you have in the liquid basket? Some people say 20%, some say a bit more, some say a bit less. That's all up to debate. So, but it's a good thing to have a little bit of illiquid assets, because on average, if you do it well, they do produce higher return on a 5-10 year basis on average. The question then emerges how to access those higher returns. And there's essentially two ways of doing it. You can either go direct into a startup or early company, Series A, B, or something, or you can invest into a fund.
Yeah.
If you're a small family office or single family office and with small staffing at whatever, it's probably better to go through a fund, quite frankly, because it's quite labor intensive to do due diligence on these individual deals. It's quite costly as well. And even when you decide to invest into the fund, you got to monitor it as well. And the more funds you invest in or directs you invest in, the more follow-up there is. So it does end up creating a lot more work, quite frankly. And so illiquidity, yes, it has a premium, but it's a lot more work. Two ways you can mitigate that. You can either invest in funds directly yourself, if you can pick the right funds. And by the way, that in itself is a big piece of work. Or you can outsource your family office activity to a multifamily office with professionals that would then do that work for you, i.e. they would spend a lot of time interviewing various VC funds, PE funds, and hopefully pick the best of the best that you get exposure to together with the other families in the multifamily office. So they all benefit from the cost savings, the shared due diligence, the co-investments, etc.
I have a question. Sorry to interrupt you, but I want to have a question regarding what's happening in the UK now when there's a family office in the UK. Usually, what we have, I will tell you it's like 1 second, 10 seconds. What we have in Romania now, we have a huge tax implemented on everyone, the high net worth individual and the families that are feeling like attacked in terms of like being double or triple taxed. We have double-digit inflation. We have, I think, a stagflation as well. We're waiting. I don't know if we need some help from outside. Looking into London now with Wimmer being based in the middle of the area in London. So what we have in London now between taxes, between the debt levels, between I don't know who's ruling now. If they are good, they are bad, or whatever. Asking for IMF. Maybe asking for IMF for helping. How do a family office like you protect themselves from tax increases, from these kind of crises that can happen in the UK? And what can we say for Romanian families?
Yeah, it's a good question. And here in the UK, we used to have a tax regime called the non-dom regime, meaning if you came from abroad and moved to London or UK, you as a foreigner, non-British, you would then benefit for the first 7 years from a tax-free status for the first 7 years for your foreign income. And that system, which has been in place for more than 100 years, attracted a lot of millionaires and billionaires into London and effectively fueled the art world, the music world, and a lot of great things, charity, etc. They benefited hugely from it, as well as businesses, even startups. They got funded that way. It created jobs and everything else. So it was a very intelligent system that's been in place for so long that attracted capital into the UK with these billionaires and millionaires. Very tragically, as the UK has been going through sort of what I would call the the death by 1,000 cuts, many bad decisions, basically, irrespective of political color here. So this is not a political statement. Obviously, we had the bad event of Brexit, which was a terrible mistake. That hurt the economy. But last year, we had the abolition of non-dom, which means basically it's not very attractive for billionaires and millionaires to come to the UK. They would rather go to Monaco or to Milan, where you could pay a flat 200 grand a year fee in taxes, or indeed go to Dubai or Abu Dhabi, and other places as well. Malta is also quite attractive, and Portugal, Greece would also come into the mix. So people would rather locate to those locations rather than here. And we have experienced a market difference in terms of the landscape here in Mayfair, where I'm sitting right now, in terms of the drain of capital, families, etc., etc. And I'm afraid to say that it is only going to get worse. The UK economy is going down, down, down. The debt to GDP as a government is running close to 100%. It's terrible, which even means that in the autumn budget this year, you're very likely to see some tax increases from an already very high level. And you'll probably see even further borrowing. And I actually took a look at the Office of Budget Statistics' own projected estimate of UK borrowing levels. If we continue the way we do right now, by 2070, you will start to hit 270%, i.e. the UK would be an absolute third world country needing bailout from the IMF. And that's according to government statistics. Now, hopefully they'll do something about it, but at the moment they are not. So it's only terrible ideas that comes out. That is, so the economy is going down, crime is going up, debt levels are going up, and the cost of living is going up, and you have more poor people, and all the wealthy people effectively gets pushed out, and with that goes job creation, wealth, capital, and arts and other cultural institutions are suffering. So I'm afraid it's not particularly good news from this end, but there are fortunately alternatives elsewhere in the world.
So it's London, it's like this. I think we should go to outside the world.
Yeah,
Let's go to the space, direct.
let's read the subject to space exploration. So you are preparing to fly into space with Virgin Galactic. How does this connect with your view of risk, innovation, and investments?
Yeah, good question. Space is my passion. It's been the passion for a long time. I was one of the very first Europeans to sign up for private space back in 2000. So more than 25 years ago, I signed up, and that's my passion. I'm an adventurer. You know, my claim to fame was in 2008, I was the first person to successfully skydive Mount Everest. I've been living with the Indians in the Amazon jungle. I've been skiing 5,500 meters up in the mountains, highest skiing station in the world. So I've done a lot of great adventurous things. I also did a great Top Gun experience a couple of years ago, where actually I flew in on a C-2 Greyhound and landed on a U.S. aircraft carrier, the Nimitz of the Nimitz class, out in the Pacific Ocean. So I've done a lot of fun and cool things in my life, but ultimately my trip to space is going to take the prize, and that's going to be fantastic. So I can't wait to go. I'm a founding astronaut with the program. We are currently in the process of building the new Delta rocket, which is very exciting. And once that's built and finished and testing has been done, then we get to fly. So that's going to be very exciting, terribly exciting. Now, your second part of the question related to investments as well.
This is what we're saying, Bern. You're adventurous. You did everything that without any like thinking about the risk-wise, and now you invest most of your portfolio is in ETFs, fully diversified, fully like risk diversification, which is totally 180% difference than your personal.
Exactly. So we may be in our core strategy a little bit boring people, I have to say, because it's very diversified, it's cautious, it's liquid, it's got all those things. And yet I do these crazy things personally, but that's because personally I'm willing to take more risk than financially, perhaps. Having said that, a couple of decades ago, I did also invest into space companies. Not because I thought it was going to be great investments, I'll be honest with you, just because it was my passion project. I thought it was great, and they needed a bit of fuel, so we put a bit of fuel in the tank, and I invested a bit on some of these. And one of these, for instance, I invested in X-Core Aerospace, spectacularly went bankrupt. So it wasn't a great investment, but hey, it made sense at the time because I was going to be their first astronaut to fly into space, and that was exciting. And I enjoyed the journey working with the guys. It was fantastic. So, but things changed about 7-8 years ago, and up till now, because now the space sector in general, aerospace and defense, has truly become a very investable sector where you can actually invest sensibly for returns, not just for your passion or whatever. You can make rational. So I'll give you an example. For instance, about 6 months ago, we invested into a into a US aerospace company called Voyager during their Series C at $1 billion valuation, and lo and behold, a couple of months ago, it IPO'd at 4x. So that's not bad for a
That's very
6 month
good, yeah.
ride. It's come down a little bit since then. Let's be honest, but it's still been very profitable. So the aerospace and defense sector certainly has become very investable, very attractive, and we have seen a market shift, especially within the world of family offices, dipping their toes into the space sector. And this is not just SpaceX, which seems to have almost unlimited capital on tap from family offices and some institutional investors, but also below that, perhaps with lesser well-known names that are also showing up with either good rockets, good satellites, good space propositions, good software, etc., both in the US especially, but also in Europe and elsewhere. So the space sector has really become very, very investable, and people are actually making a lot of money on it. I mean, some people I know invested early on in SpaceX because they backed Elon and what he was up to, and the valuation on SpaceX today is about $400 billion. It's huge. They have a massive ride. Even when people were saying, when they were doing around at whatever 20, 30 billion, and people say, oh, that's too much. I mean, that's crazy. Well, it's done more than 10x since then, I'm afraid. So it's been a good investment. So there's a lot going on. You still got to know the technology and the competitive landscape and the positioning. But it's terribly exciting, and it's also very profitable if you get it right.
Look, Per, I just want to ask you a question. If we take your passion and the way you invest in your family, and we transport it to Romanian families, what can Romanian families and entrepreneur and high net worth individual, especially as a first generation, because I'm sure that's different story between you guys and what we have here, but how they can learn from your approach, both in finance, in life, everyone has his own passion, but both in finance, and to make the structure to go beyond the first generation, to be able to invest, diversify, and be structured in a way that the wealth can last for future generations.
Well, I think the Romanian families would do very well contacting your good selves initially, hooking up with professionals, truly professionals, and then we can all have dialogues. Let's say if there are certain solutions or certain challenges that are faced in Romania, or somebody in Romania wants to access certain deals in the international markets, well, you guys can call us and we can then collaborate on that, professional to professional. And therefore, a Romanian family office that perhaps do not in its own right, given their size and their network, have access to fantastic private equity deals, just like the one I just mentioned, via you, and you can contact us and we can work together on it. We can do co-investments together because of the professional network, the benefits of that, the trusted relationship. And I guess that's what people get also if they team up with your good selves. They get that access because you have the hotline to London, certainly to me.
Yeah,
and then beyond, and
beyond
dare I say,
space,
all the
going
way
up.
to space as well. we cover all of that. So the sky is truly no limit in that scenario, which incidentally is the title of my latest book as well. So if you want to have a good read of the journey, The Sky is No Limit on Amazon is an award-winning book about how to do it.
Perfect. I want to be at Adrian. We were talking, and Adrian was asking me about the about Per Wimmer and Wimmer family, and you were asking about the governance in terms of the how. I don't.
You mentioned at the beginning the family values. So how important is the governance in a family office? I mean, values, education, succession planning, comparing just to give a maximum return.
It's very important you got your setup right, because if you don't have it right, you can have great returns, but you will end up tripping and messing it up anyway. So whether it's your testament, your inheritance, your governance, your investment processes, both the soft and the hard elements of it, but certainly the professional setup, it's very important. Because otherwise you can quite quickly find yourself in a conflicting situation with other family members, and
Absolutely.
and nobody wins, except one, maybe the lawyers eventually. But you can avoid all of that by having a professional setup. And if you're a small family, you can set it up with a good multi-family office in Romania, and they can help you guide through that, and they'll have templates and things like that. And that's a good way to protect yourself against future threats, future challenges. So if you have a good professional setup where you've got the non-investment bits sorted out, you can then turn your focus to the investment bets and then make some good risk-adjusted returns. And that's what I recommend doing.
Thank you for bringing us not just financial insights, but also vision here. From creating ETFs to building a family office to preparing for space travel, which we are always waiting for to see this. Your story shows us that wealth management is not only about numbers, but about structures, value, and bold vision. For Romanian families, the message is very clear. The time has come to move beyond deposits and ad hoc investments. Family office, whether it's single or a multi-family office, is not a luxury, it's a necessity if you want to protect, professionalize, and grow wealth for the next generation. Adrian, I want to thank you as well for being always with us and with the CFA Society as the president of the CFA Society, and always trying to educate and advise people as well in Romania for families and multi-family office. And hopefully we're going to welcome Per in Romania with your invitation to one of the family offices CFA conference in Romania before he goes to the space, because if he goes to the space, we cannot catch him.
With great pleasure. And it's been an absolute pleasure talking to you here tonight. And may I leave you with the following 7 Wimmer fundamental values. Think out of the box. Be open for crazy ideas. Number 2, follow your heart. Follow your passion. Be authentic. And do what you feel like, what your heart tells you. Number 3, once you've figured out what those crazy ideas are, stop talking about them. Focus and execute. Number 4, manage your time discipline. That's a resource we cannot get back. You can have all the money in the world, but we all unlimited time. So therefore, make sure your priorities correspond to your time allocations. Number 5, teamwork. 1 + 1 + 1 = 5. Why is that? Because synergies are created within teams, and therefore you gotta work with teams. Nobody is the best in the world and can do everything. You gotta work with great teams and surround yourself by great talent. You don't have to be the smartest person in the room. Surround yourself by smart people in the room. That's the trick. And number 6, risk reward. Always assess what is the maximum risk I'm taking. When I do adventures and jump out Everest, I'm putting my life at risk, but I love doing adventures. So on a risk-adjusted basis, I'm okay with it. Not everybody wants to have that kind of risk profile. That's okay, or going to space for that matter. But hopefully you'll join the journey and watch us going up. And number 7, and this is the most important of all the 7 fundamental values from Wimmer. Make sure to give back. Make sure you do the right thing. We do that through charities and also being just nice people. And if you're a nice person and you give back unselfishly, you will actually experience, not only is it a fantastic feeling and sometimes the best feelings of all to actually be giving, but you'll also feel that it spreads like rings in the water and eventually comes back like a boomerang. That's very, very positive. So those would be my 7 values I recommend you doing. Follow those and you will make it very far, perhaps into space. I'll see you there.
Thank you so much for
Thank you very much.
It was nice, man, to see you again, to be honest, and to have this talk with you. Hopefully we can bring you, we can come invite you to Romania at any point of time when you have time.
With great pleasure.
Well, the country, to see as well the opportunity going forward. Collaborating with you guys is something that we're open to, because basically being a multi-family office, we're gonna, the families will collaborate between each other. So we're gonna collaborate with you guys, even with the funds that you guys have, ETFs, because it's something that we liked it before and we want to see it again. And I don't know, whenever you have some adventure to see this part of the world, I don't know if you were here.
I've never been to Romania. I would love to go. So hopefully
So
there's an
you
occasion.
just let me
Yeah.
know. I will let you know when we're gonna do like a
Yes.
small private dinner here in Romania, and if you have time to join us, it's like 3 hours from London.
That would be perfect. I would love to. That would be my great pleasure.
Thank you so much, Per.
Much.
Thank you so much. Thanks.
Bye.
Good to see you guys.
Bye bye.
Bye-bye.